So earlier on, I tweeted that this is pretty much the perfect retest on Bitcoin. And if you look at the charts now, it's pretty much exactly what I'm seeing. I guess what you'd imagine is that when you break out of a 7-month downtrend, what you'd get is a retest. And if you look at yesterday's close was just over the line. And so what we're praying for today is that we close over this line. And if we do close over this line, then I've got very, very, very good news for you guys, because I'm going to show you one indicator that pretty much shows that if we close over this line, then we're going to get an increase in Bitcoin of anywhere between 100 and 6,000%. Yeah, you heard that right. Anywhere between 100 and 6,000%. I'm going to show you that indicator, and then I'm going to show you a strategy that I looked at, that I've been deploying, which I think is almost guaranteed to make you money if you deploy it correctly. It's one of those strategies where I took a spreadsheet and I monitored how I made money on certain crypto assets. And I realized that there's a certain pattern, and that if you follow that certain pattern, you're almost guaranteed to make money. So I'm going to show you that strategy, and hopefully you guys can apply that strategy. So let's get going. Again, here from Dubai, let's get the show on the road. You know, it's so hard to bring you guys crypto love and crypto wisdom when you're here in Dubai and you're at the conferences and you're juggling between one conference and another conference, and then you've got meetings and meetups and whatever else. But here I am doing my best to bring you guys everything that I can. Again, the reason why I wanted to do a show today was because, again, I saw a signal. First of all, I saw a lot of FUD. There was like a ton of FUD that I saw on my timeline where people were saying, hey, bro, like, how come the prices are going back? I thought you said we broke out. I thought you said that when we break out of this 7-month-long downtrend, we're going to go straight down. We're going to go straight to Valhalla. But, I mean, it doesn't exactly work like that. Remember that when you've been testing a level for 7 months, like in 7 months, we tried to break out of one specific level. We tried and we tried and we tried. And eventually, we broke out of that level because of what I told you was perfect momentum. And so what you would expect is you would expect a whole lot of people to be exiting here, people that didn't believe the breakout, et cetera, et cetera. And now we are actually at the testing point for Bitcoin specifically. We want to close above this level over here. We want to close above the level over here. Yesterday, we closed just on the trend line. Today, we want to close just above the trend line. And if we do close just above the trend line, then I believe that we actually may get huge momentum on Bitcoin. Now, I showed you yesterday and the day before that the momentum that we got on Bitcoin was the buying momentum that we got on Bitcoin was pretty much unparalleled. And that buying momentum actually continued. In fact, yesterday, again, we got $295 billion flowing into all the ETFs combined. Now, if you take the last 7 trading days, 1, 2, 3, 4, 5, 6, 7 trading days on Bitcoin, what you realize is that we've had $2.7 billion of inflows in the last 7 trading days of Bitcoin. So 12 to 13% of the total ETF inflows that we've ever had of all time actually came into Bitcoin in the last 7 days. Now, you may be asking why we're getting all this inflow. I think it could be something to do with this pattern that you're seeing over here. So if you look at the S&P 500, the S&P 500, as we know, has been way ahead of Bitcoin for a long time, right? Like we've always said that Bitcoin is lagging the S&P 500. And what you can see is that the S&P 500's real run that actually started here at the as soon as we broke into this cup and handle pattern. And the same thing with gold. Gold is also very much at all-time highs. And if you look at the gold chart, let's quickly just go to the gold chart so that you can actually look at the gold chart. Gold is also right now, again, at all-time highs. For the last 2 days, every time we've come here, it's been at all-time highs. And so what could be happening is that the TradFi market has pretty much been looking at Bitcoin and saying, look, we've had a 7-month area of accumulation, which is pretty normal when you take this. I mean, the gold area of accumulation was a couple of years. The stock market obviously was much shorter because the stock market had a lot more upward momentum. But now it feels like if we get this breakout and we hold this breakout, then we've printed this cup and handle. But there's also been another pattern which has actually been printed on Bitcoin, right? And I want to show you that pattern. But before I do, what I need you guys to do is, number one, I need you to subscribe to the channel if you're not already subscribed. Then I need you guys to obliterate the like button. I need you guys to go absolutely crazy in obliterating the like button and making sure that everybody gets there. Because the more you hit the like button, the more the YouTube algorithm thinks that this guy actually knows what I'm talking about. And I think when I show you what I'm going to show you today, you're going to believe that too. And then it tells people this is good content. So I'm counting on you to obliterate the like button. Also, speaking of a very active community, I'm so proud of this community. Remember I told you guys that there was a Telegram platform, which was a Telegram gaming platform, which was effectively in Alex Becker and Ellie are actually working on this thing, and they're building like a Telegram gaming marketplace. And I told you guys that if you wanted to get free tokens, you don't have to pay for them. All you had to do was go to that link, hit that link, and you guys could play, and then you could earn. Well, I'm glad to say that we are currently the number 5 most active community in the world. We're even higher than Elio Trades' community. And it's not finished yet. There's still, as he says, there's still 25 days left. If you want to get involved, all you need to do is you need to go to the bottom of this YouTube description, go to the actual link here. Let me quickly get it for you guys just so that you can see it. There we go. So you go here, and there should be a Ton Station here. You click here, and you go and download Ton Station. You've still got 25 days to get the free airdrop. Right now, we are the 5th most active community in the world, which means that our community will get rewarded better than any other community. And again, there's no money involved. There's absolutely no money involved. Also, later on in the show today, I'm going to show you a trade that I took that actually took me from being nowhere in the Bybit trading competition, and now I am 26 in our squad and 400 around the world. And I'll show you what that trade was, and maybe you want to emulate that trade. So let's get the main show on the road. And as I said to you, what I'm seeing is I'm seeing a lot of momentum. I'm seeing that even though the crypto bros are getting depressed every time that that Bitcoin actually hits this or actually went below this level over here, I still believe that on the weekly, as long as we close above this level over here, which is the 67,400, depending on how the week goes, I think we're pretty safe. And as I said to you, I think that this is coming from an increased momentum in TradFi. So I don't think that this is necessarily crypto buyers. I think that this is TradFi buyers coming into crypto and pushing up the price of Bitcoin. And as I showed you, we have had $2.7 billion worth of inflows in the last couple of days. But it's not only on the spot market that we're getting these inflows. If you look at the open interest on Bitcoin, it's at an all-time high. So we're at 40 billion open interest across all exchanges. And when I say all exchanges, I mean spot exchanges, futures exchanges, crypto exchanges, and on the CME. We're at the all-time high for Bitcoin spot volume. You've also got the highest, Whales bought the highest number of Bitcoin since 2014. And you're getting demand on chain. So why am I showing you all of this? Because it kind of feels like the momentum has completely changed on Bitcoin. We were at a momentum where we were at the sideways wedge going down for 7 months. But then we had the higher high, and then the higher low, and the other higher high, and the other higher low. And that was really the first sign that the momentum was changing. That sign that the momentum was changing was then confirmed by the on-chain data and the on-chain data and the buying of Bitcoin basically on-chain. And now we're at a point where we seem to be at the last part of the accumulation phase of the cycle. So the whale accumulation phase of the cycle pretty much looks something like this. Whales accumulate, and then as they get to a point where we're about halfway or we're starting to climb up the fast part of the cycle, what the whales then do is they actually start offloading their Bitcoin, where retail comes in and actually starts buying their Bitcoin. Now, look at where we are in this cycle. Number one, you can see that we're still in the accumulation stage of the cycle, which means that the best is yet to come. But number two, it looks like we're still early in the accumulation stage. In other words, there's still a lot of accumulation to actually happen before we actually start the distribution of coins by the holders. Now, look, the last part of this tweet pretty much sums it up. It says, the momentum runs chills down my spine. And I think if you want to talk about momentum, I think there's another indicator, which is an indicator which measures momentum and is extremely bullish. And I want to talk to you about that momentum. So the general way to measure momentum in a in a chart is to look at what they call the moving averages. So the moving averages is effectively, if you take the 10-day moving average, it's the last 10 days prices, and then you move to the next day, and then you drop the last one, and you move to the next one, and you basically take the moving averages of the prices. Now, that moving average shows how the momentum is starting to change. And what people basically do is they plot the 200-day moving average and the 50-day moving average. And when those two cross, when you get the 200-day and the 50-day moving average actually closing, that is what you call the golden cross. And I think we've spoken about the golden cross many, many times. But I want to show you that if this chart remains correct, we're looking at about 5 or 6 days before we get another golden cross. So in about 1, 2, 3, 4, 5, so I'd say before the end of October, we will get another golden cross happening on the charts here. Now, why is this golden cross significant? Well, what I did was I went back to the times when I got into crypto, or the beginning of, not the beginning of crypto, but beginning of actually being able to measure good prices in crypto. And I went and got the researchers to plot for me what happened every single time that we got the golden cross. So the first time that mainstream was in. Now there were golden crosses before this, but they were golden crosses before we had real price liquidity and stuff like that. This time, the first time that we got a golden cross, we got the golden cross 64% from the bottom of the Bitcoin run. So you take the bottom, and then you take the golden cross after the bottom, and it was 64% away from the Bitcoin run. But after that, Bitcoin went up 6,823%. So that is the first time that we actually got the golden cross. It came 64% from the bottom, and you can see that we got about 100x returns after the golden cross. And that was in 2015, 2016. Then there was another golden cross, and that golden cross happened in 2019. That happened 59% from the bottom. Okay, so the first that golden cross, we got 59% from the bottom. And after the golden cross, we had 173% return straight after that golden cross. Then it happened again in 2020. Now, 2020 is probably a very good year to compare it to, because 2020 was an election year, and it was also it was a halving year. And what you can see is that we got the golden cross 40% from the bottom. And after the golden cross, we went up 600%. Okay, now this was probably the best year to compare it to, because it was a halving year and it's an election year, and we are in a halving year and we are in an election year this time. But we're 40% from the bottom and then 600% after the golden cross. We then had it again in 21, which wasn't a halving year, but also it was a year when we were in a downward trend. We got 47% from the bottom and we got 53% afterwards. Then in 22 and 23, 45% from the bottom and we got 40% afterwards. Now we are back here in 2024. And if you look at where we are in 2024, so let's take the bottom of potentially, we could say, this cycle. So let's say that we go all the way back to, we can go pretty far back. So let's go back to this level over here. We are currently about 300% off the bottom, but we could actually go to closer into this specific cycle. So maybe go somewhere from around here. We're currently about 72% from the bottom. Now, in about 5 or 6 days, it looks like we're going to get that golden cross happening again. And then we're going to, we could potentially go up anywhere from 6,000%, which I doubt we'll get 6,000% because the prices of Bitcoin were very, very, very low, to, in the next year, 173%, in 2020, 600%, in 2021, 53%, in 2022, 40%, and in 2023, 118%. In all cases that we've had the golden cross, we have landed up actually going up. Or in 90% of cases where we've had the golden cross, we've actually landed up going up. So this is a very, very, very accurate indicator that the momentum of an asset, and specifically in this case Bitcoin, the momentum of the asset is actually moving in the right direction, or in the direction that we wanted to move on to. And I read this tweet by a guy called Thick Teddy, and he talks about how to actually trade the golden cross. So let's quickly just go into how to trade the golden cross. As he says, the golden cross is when a 50 MA crosses over 200 MA. The golden crosses are important because they tell us when momentum is shifting. And this is why I'm specifically talking about it now, because the on-chain has told me that momentum is shifting. And now the charts are telling me that momentum is shifting. How to play the golden cross. This is very important. So after a golden cross confirms, he usually says there is a reversal. So get the golden cross confirmation, which is somewhere over here. We continue to go up, but then sometimes you have a reversal and you close under the 200-day and the 50-day moving average. And he says this is when he likes to actually get into the golden cross trade. And then when do you take profits? Well, again, it depends what kind of investor you are. He says when the 50 MA breaks, I know I need to lock in most of my profits. When he says that's pretty much what happens when later in the cycle, when the price breaks below the 50 MA, the first break below the 50 MA is probably the best time to actually start taking profits. Then you'll potentially get some kind of retest, and then he says usually we start going down. If you're an investor, it's smart to hold until the death cross, and the death cross is when the 50 MA and the 200 MA actually cross in the opposite directions. That's the difference between the trader and investor mentality. So he says, look, an overview, the 50 MA crosses the 200 MA, into long on the pullback after the cross, ride the momentum until the death cross forms. Not every golden cross is going to work. Make sure you plan your trade before. So effectively, what I'm showing you is that momentum has actually started to change. And because momentum has started to change, I guess you need to look for the on-chain indicators, which I've already done. And now the charts are showing you exactly the same thing. And so we need to position ourselves for slightly more bullish momentum. And you're asking me, when will this golden cross happen? If the charts carry on like the charts are carrying on, I think we're about 5 or 6 days away from the golden cross actually happening. And I thought I'd bring you the golden cross trade long before everyone else started to do it, because I think when it actually happens on the day of, everyone's going to be talking about the golden cross. And I thought I'd bring it to you guys before. In the interim, today, what I actually did was I actually took a trade. And that trade has made me number 26 in the trading competition, the Bybit trading competition. By the way, you can still enter the Bybit trading competition if you want. There is I think there's a link below in the description. Go and click the link below, and you'll be able to join us in this competition. If we win, we get $10 million or prizes up to $10 million to share with the squad. But I want to show you the trade that I took. Okay, so now the market's gone down, and this trade's gone slightly down, which means that it might be a good time to actually enter this trade. And the trade that I took was I entered Raydium. And that should be no surprise to you. And the reason why it should be no surprise to you is because literally yesterday, when we did the show, I said to you, I looked at the Solana ecosystem, and there were 2 or 3 tokens that I would definitely buy. The first token that I would buy was Drift. I told you I'd buy Drift. And if you look at what happened to Drift in the last 24 hours, even though the market is very, very much down, Drift is back up about 50 cents. Yesterday, when we bought it, it was about 44 cents. It's still up it's still up, even though the market looks like a sea of red. You can see that the ones that are still up today are Raydium's up 11%. Drift is another one that's up. So Raydium was the other one which I called yesterday on the show, and I said, look, this one's actually I'm going to start buying it. Now, a lot of people said to me, look, why are you buying a token with a $1 billion fully diluted market cap? What is the upside for you in buying a token with a $1 billion fully diluted market cap? And this is what I wanted to, like, I know sometimes protocols look like they have a $1 billion fully diluted market cap, and you say to yourself, I can't buy anything that's trading at $1 billion. But I also think that sometimes you're not looking at the data deeply enough to understand why it probably is a good buy. And when I actually went to my researchers and I said, look, guys, I'm actually going to be buying Raydium now. Can you please execute the order? They said, well, why are we executing an order for something with a $1 billion market cap? It's so not our style. And the reason why I was so adamant that we should be allocating to Drift was to Raydium and to Drift is, one is I saw lots of fundamental tweets that said, look at Raydium. Raydium's doing $3.41 million in revenue per day, which makes it a higher revenue generating protocol than ETH was generating. But then I plotted out another kind of study. And the other kind of study said, well, I said, look, I have a thesis that Solana is going to be as big as Ethereum, or that Solana is going to be the biggest layer one chain out there, right? The biggest layer one chain out there, maybe under Ethereum, but certainly the biggest monolithic layer one chain out there. And for those of you who don't know what monolithic means, it means that everything happens on chain and we don't have all these side chains. And what I looked at the valuation of Uniswap. And when I looked at Uniswap had, which is the equivalent, it's a decentralized exchange on Solana, on ETH. I looked at the relative valuation, fully diluted valuation of Uniswap versus the relative fully diluted valuation on Ethereum. So Ethereum has a fully diluted market cap of $317 billion, or maybe slightly less now that the market's starting to come down. I mean, let's just quickly look at what ETH's market cap looks like right now. So ETH's market cap right now, 317 billion, as you could see. And then I looked at the Raydium fully diluted market cap, which was $1.4 billion. So you now have Uniswap trading at $8.156 billion. And the chain that Uniswap is servicing is the Ethereum chain, and the total value of the chain has a $317 billion fully diluted valuation. Solana has less than $100 billion fully diluted valuation. And the biggest DEX on Solana only has a $1.4 billion fully diluted valuation. So at first glance, what I realized was that just if I compare the relative chain of the biggest DEX on Solana with the relative valuation of the biggest DEX on Ethereum, and I just say market cap for market cap, I realized that there was still probably a 2x in Raydium. So in other words, if Raydium had to get to become 2.57% of the Solana protocol, then what I would have imagined is that Raydium would have the same relative valuation as Uniswap, and I would imagine that the two of them should trade at par. Now, if the two of them should trade at par and Raydium is trading at 1.45%, that to me says that there should be that there's already at least or close to a 2x by just buying Raydium, just on the valuation of Solana versus ETH, and the biggest DEX on Solana versus the biggest DEX on ETH. That would have been my first confirmation that this was the right move to make. But then I looked at something else, and I said, look, let's take the fully diluted valuation, which is the price, divided by the earnings. And so what I did was I took the annualized earnings of Uniswap, and the annualized earnings on Uniswap are $477 million, which means that the fees or the revenue collected by Uniswap on an average, on an annualized basis, now obviously this changes every single day, but as at the data that we got today, we annualized the fees on Uniswap at $477 million, and we annualized the fees on Raydium at $532 million. So when you compare those two, you can see that Uniswap has an 8 or 7 times or 6 times higher valuation than Raydium does. But the fees that right now Raydium on an annualized basis is collecting way more fees than Raydium is collecting. And so what I realized that if you want to make it on a PE basis, right? The PE basis, like if you were to value it like a stock market asset, it's not PE because it's P revenue, is that Uniswap is trading at 17 times its revenue, whereas Raydium is trading at 2.65 times its annual revenue. And that to me just said to me that, hold on a second, something here just looks a little bit out of kilter. Either Uniswap is grossly overvalued, or Raydium is grossly undervalued. Then I did one final confirmation test just to make sure that my analysis was actually correct. And what I did was I wanted to see how many people are using this platform to generate its fees. Now, the daily active addresses on Uniswap is 617,000, and the daily active addresses on Raydium, believe it or not, is a whopping 2.1 million. And what that tells me is that on Raydium, a lot of small people are trading. It's the meme coin traders, and they're trading, and they're trading, and they're trading, and they're trading, and they're trading. And therefore, Raydium has a lot of small accounts generating an annualized fee of $532 million, and Uniswap have a lot of big accounts, or much fewer big accounts, generating $477 million worth of fees. So when I took all that information, I was like, hold on a second. I know Raydium is trading at a $1.4 billion fully diluted valuation. But, I mean, if I look at all the metrics, as well as if I compare that to my thesis around the valuation of Solana versus ETH, and the fact that I think that Solana is going to carry on growing versus ETH, then it kind of makes sense to me that even though it's trading at a $1.4 billion valuation, if Solana actually breaks out and continues the run, and Solana continues to be used, which is my thesis, that's what I'm planning for the rest of the thing, then Raydium is actually an amazing bet. And that's why I took the Raydium trade yesterday. From the time that I took it, I mean, it's probably equal or slightly up, but you can see that the trend is very much up. The next thing that I did was I took a bet on Drift, and Drift was another one of the ones that actually exploded. And here I want to spend a little bit of time talking to you about why I took a bet on Solana, then Drift, Solana, then Raydium, then Drift. And I think the best way to show you guys how this thesis actually plays out. And again, forgive me for today. It's very much like a masterclass or a lecture as opposed to just a fun show. But I really want to give you guys amazing knowledge so that you can understand how I'm thinking about what I'm thinking and why I'm making the moves that I'm making, and realize that they're not just random moves that I'm making. These moves are highly calculated moves that really move towards a thesis. And I want to show you what the thesis is and what these moves are. So one of the tokens that has really been moving for a long time, and we've called it for a long time, is Mantra. Now, Mantra, as you guys know, is a real world asset play. And in case you guys haven't been following us, we've called Mantra since about 40 cents. It's been called in the front runners pretty much by every single person in front runners. The first call was, I think, with Paolo, and that was around 30 cents when Paolo actually made the call in front runners. I called it a few times. I called it on a few of my calls. Kapoor and Joe also called it on their calls. This is one of the big calls that we actually made on front runners. Now, what is front runners? For those of you who don't know, it is our Discord group. It's where we share all of our alpha. It's where we have a much closer access to our community. You can join front runners over here. The waiting list is currently open, and we are taking in a few more people. But this is where the calls actually happened. And now what Mantra is doing, Mantra is a real world asset play. Effectively, what they're doing is they're building a layer 1 protocol for real world assets. Okay, so that's what they're doing. And now you might say to yourself, well, okay, why do you need a specific L1 for real world assets? Why can't you just use Solana? Why can't you just use Ethereum? Why can't you just use Sui for real world assets? The truth is that was the question that I asked the team when they first happened. But the thing is, when it comes to real world assets, you really have to be compliant with the regulation, right? And in each territory, there's going to be different regulation. And a lot of the compliance has to do with things like control over transaction, whether the chain is permissioned or permissionless, whether you're going to need a identity layer. Remember that when you're dealing in real world assets, you have to deal with institutions like banks and other finance departments. And what's going to happen is that you need an SDK where everyone can plug into in a regulatory framework and compliant way. Now, one of the things when I spoke about the real world asset play this morning on the research call, one of the researchers said to me, but why are we getting excited about the fact that there's real world assets that are now being brought onto the blockchain? And I agree with you that at face value, having $100 million building on chain is not really very exciting. Like, it's like, who cares if there's another 100? Who cares if we take a $100 million building and put the asset on the chain? That's like, there's no alpha there. There's nothing there, right? But then I tried to explain, well, what I explained to researchers is the following. You got to look at the world of finance in 3 layers, right? The first layer is the asset. So if you take a $100 million asset and you put the $100 million asset on chain, that is the middle layer of the circle over here. And the asset itself is always the smallest thing in the ecosystem. Then after the asset, you have another circle around it, which is the value of the trading of the asset. So you think to yourself, okay, if I put $100 million building on chain, I've only got $100 million on chain, right? But how many times can I trade that $100 million? Can I trade it 100 times, making it $100 billion, 150 times? The more you trade it, the more value that you, by putting one asset on chain, you're creating a trading market that is at least 100 times bigger than the actual asset itself, right? And that is specifically just trading in and out of this asset. So just trading inside and outside of this asset. And then there's a third layer to it, which is a much bigger layer of the asset. And that is the derivatives layer. So the asset's always the smallest part of it, and the 100 million. Then the trading level of the asset is slightly bigger. It takes it to 10 billion, let's say. You can trade at least $10 billion worth of much more, actually, it's probably 100 billion. And then the derivatives platforms, the futures and the options allow you to trade multiples on the spot trading. So that is the three levels of getting an asset onto chain. And so when you think to yourself about why a real world asset chain is so important, and by the way, I think that Mantra are actually going to launch their mainnet tomorrow. I know that I'm booked to do a fireside chat with them. And I think that on the fireside chat, they're going to announce the fact that their mainnet is actually live. And I think when their mainnet actually goes live, there may be some more upside to the token. I don't mean immediate upside, like tomorrow it's going to spike to $2.50. But I think that is going to get the mainnet. The mainnet is going to drive the price of the asset up. Anyway, going back to the thesis, why did I go Solana, Raydium, Drift? Because if you look at the three levels here, you're looking at the asset, which will be on the main chain. Then you're looking at the spot exchange, which is going to be trading spots. In other words, if you look at Raydium, Raydium doesn't trade derivatives, it only trades spot. So you can buy and sell certain pieces of Solana or certain number of tokens. The derivatives layer is the one that is like the explosion. So if you think about this, the trading layer will always be bigger than the real world asset. The derivatives layer will always be 100 times bigger than the trading layer, because what they do is they launch multiple options and futures and combinations of options and futures on every asset that's launched. So I'll give an example of even a meme coin, because a meme coin is probably a very good example. So you take Popcat, right? And we'll look at the market cap of Popcat. So the market cap of Popcat today is $1 billion, $1.3 billion, right? That is the base value of the asset. The base valuation of the asset is $1.3 billion. But now let's look at how much trade is happening on that $1.3 billion. So from a spot point of view, if you look at it here, you've got $300 billion happening every 24 hours, right? So $300 million is trading every 24 hours on a $1.3 billion asset. You times that by 30 in a month, you're talking about 30 times 300 million is, I think, $10 billion, right? So 10 times the value of the asset is traded in the spot market. Okay, but then we go on to the futures market. And if you look at the futures market is at least 5 times the size of the actual spot market, right? And so who's going to be the biggest winner here? Well, the asset itself is a very small part of the pie. The bigger winner is the decentralized exchange, which is trading the spot version of that asset, which in this case is Raydium. But the biggest winners are the people that are trading derivatives. Now, what is a derivative? A derivative is an option, it's a future. It's anything where you're not trading the actual token, but you're trading a derivative of the token. And so that is the investment thesis that I think is super important that you apply when you look at an asset. When you look at an asset, you say to yourself, hold on a second, who are going to be the ultimate custodians of the value of putting this asset on chain? The smallest custodian of the value is going to be the asset itself. So Popcat, the smallest custodian, is going to have a $1.3 billion market cap. The bigger custodian of that is the exchange, because the exchange is going to make a lot more fees than the value of the underlying asset over time, specifically when you take the asset that's put onto chain. And then who's going to make more money than the spot exchange? Well, the derivatives exchanges, because they're going to do 100 times the volume of the spot exchanges. And that is how to think about real world asset investing. So let's bring that back to Solana. On Solana, what you do is you'd invest in the base asset, which is the meme coin, the Popcat, or you can invest in Solana. Then you can invest in Raydium, which is the spot exchange. And then you can invest in Drift, which is the perpetuals exchange, which is going to do eventually more volume than the spot exchange. Now, let me show you something super, super interesting, right? When we look at the fully diluted valuation of Drift, the fully diluted valuation of Drift is $519 million. The fully diluted valuation of Raydium is $1.4 billion. Does that make sense to you, given what I've just told you? No, obviously not, because we know that Drift is going to have, if Drift becomes the winning DEX on Solana, the winning perpetuals DEX on Solana, which I think it will become the winning perpetuals DEX on Solana, then it will do more trading volume and make more fees than Raydium will make. The perpetuals exchange should always have a higher valuation than the spot exchange. If you think of the spot exchanges or the crypto exchanges, where do you think the crypto exchanges land up making all their money? They don't make their money on spot, they make their money on derivatives, because the derivatives apes take so much more, right? So when you're investing in a chain, invest in the chain, invest in the underlying asset, invest in the spot exchange, but you'll probably land up making most of your money on the derivatives exchanges. And the same thing with Mantra. So Mantra tomorrow is launching their mainnet, but very, very, very soon, what you'll probably see is they're going to launch an exchange, because right now it's just a chain for real world assets. But where are you going to trade these real world assets? Well, apparently there's a new DEX that's going to come out soon. And where are you going to trade perpetuals on these exchanges? Well, you're going to do it. So you're going to do it. So someone says, what about DYDX, DYDX and Uniswap? Exactly. That's exactly the right thinking. DYDX theoretically should be bigger than Uniswap, but it's not, because DYDX hasn't executed very well, and because they moved from being on Ethereum to being on a Cosmos sidechain, and that's taken a lot of time. But one day, when the market is settled, the perpetuals exchanges will always be bigger in profitability and therefore in market cap than the spot exchanges. So you want to kind of go 4 levels. 1, the chain. 2, the underlying assets. 3, the spot exchange that's trading on the underlying assets. And 4, the derivatives exchanging on the underlying asset. Now, someone says, what about Cetus? When you get to a small chain, and I looked at all the small chains, you can see that I've actually done a lot of homework over here, right? So when you get to a lot of small chains, you can see that the ratio of the DEX to the small chain actually remains pretty low until the market is convinced that the chain is successful and that the DEX is the bona fide big DEX on the channel, on the thing. So look at Cetus. Cetus is trading at 0.41% of the valuation of SUI. Then if you look at Solana, which is the Aptos equivalent, which is the community-owned DEX, 0.45. And then I litmus checked that against Ref Finance, which is the biggest DEX on Near Finance. And what you can see is that when the chains are small, the valuation of the DEX relative to the chain remains low, because there's less assets to trade, because there's less trade going on, because there's less network effects. But when the chain starts to grow, you can see that people start to appreciate that lots of assets are going to be traded. Therefore, the ratio of the DEX in relation to the chain increases. And what it feels like is, it feels like right now, probably one of the most undervalued risk-reward trades in the market is probably the Raydium trade. Now, you may say, look, Raydium has run a lot, and it has. But even though Raydium has run a lot, I'm still comfortable to take this Raydium trade. And as I said, this was the trade that actually put me back in the competition. You can see there's the trade that I took over there on the Bybit trading competition. Now, 3 of my trades are very positive. My Beam trade is specifically very positive. My Aptos trade is positive, and my Raydium trade is positive. The one trade that hasn't worked out as I expected is my Say trade. But I'm still bullish that when the market runs, I'll either get an exit there, or Say will actually start moving, because people will start looking into alternative layer ones. So for now, what I'm looking to do, I'm looking for Bitcoin to close over this trend line over here, which again, this is the number. We just need for it to close over this number, and then we continue to go. Also, what we're going to look at today is we're going to look at the ETF inflows. Maybe we'll see a continuation in the momentum. And if we do see a continuation in the momentum, well, then that just affirms that everything is on the right track. And then I'm going to carry on investing as per the investment thesis, which is exactly what I've been doing. So listen, with that in mind, I'm going to go back to my conferencing. I thought I would bring you some crypto love and crypto wisdom. If you enjoyed the episode, please subscribe. And if you haven't already, smash the like button, destroy it. I mean, I'm not supposed to tell you this, but the Matra mainnet is going to go live tomorrow when I do the chat with them. I'm sure of it. They haven't told me, but I'm sure it's going to happen. Watch this space tomorrow. I'll see you guys again tomorrow. Until then, trade well, my friends.